All right, what's up, team? This is Ruben from TGE, and in today's video, I want to talk about, does the Elliott wave really work? Can you be profitable? And we'll cover that, all right? But first, let's talk about the wins that have happened since the last video. We had a good day yesterday. QQQ put was a loss at 8%, then we had a break even, and then we had CCJ at 47% return. This was good, okay? So something that we do a lot is keep our losses small and our winners big. Okay, that's how you become profitable, or at least have a good break-even day. All right, today we have another small loss and two good wins on QQQ. So we had one small loss on QQQ puts the first time, and in the second round, we had a 36% return and then a 7% return on a longer expiration day. So that was good. All right, so those are the wins for today. Everybody's winning. Everybody's happy inside TGE. All right, let's talk about the main topic. Does the Elliott wave really work? Can you be profitable? So here's the article. If you ever ask yourself, can I actually trade profitably using Elliott wave? You're not alone. Most traders are sold the same idea. Okay, market moves in waves. Everything is psychological. Elliott wave is the secret roadmap to price. But what if I told you that the idea is only half the story? Okay, so in this video, or in this post, I'm going to break down what the Elliott wave theory really is, why it's both seductive and dangerous, okay, very important, and how real traders build systems that actually work without relying on complex wave counts or vague labels. This is really important, okay? Because it plays into the theory again. Let me see. It plays into the theory of doing the most minimal amount of work for the most amount of effort. And like I said before, and I've said it again, I'll say it again every single time, is that the market is built off of billions of dollars. And so to think that these simple wave drawings is going to predict future pricing is just a bunch of baloney. Like, it does not work. It's just to kind of take your money, in my opinion. You really, honestly, to win in this game, you need math. You need to be good at math. You need to love math. You need to love statistics and probability. Okay, because if you go to any firm, and especially any quant firm, if you try to bring up some of this stuff, they'll probably laugh you out of the building. So let's talk about what the Elliott wave claims to do. Okay, at its core, the Elliott wave theory says the market moves in 5-wave impulse, so followed by a 3-wave correction, right? So kind of like 1, 2, 1, right? And then it goes like this and so on. And like they say that the last correction wave is the biggest one. So supposedly, right? That's what it's supposed to be like. It sounds logical, predictable, and even scientific, but here's the problem. Most traders can't agree on what wave they're even in. Okay, you'll see this all the time. This is so true. Two analysts labeling the same chart with completely different counts, charts that only make sense in hindsight, and wave labels getting rewritten when the market proves them wrong. So they're always like, it's very subjective. This whole thing about the waves is very subjective. And then also it's like it's like, what time frame are you looking at? There's like the hourly, some people are looking at the 45 minutes, some people are looking at so many time frames, and each one tells you a different story, and it's so hard to get anything uh like to align. It's really, really difficult. Okay. And then also when they're wrong, and I've seen this so many times on Twitter, when they're wrong, they want to correct the wave in their post, in their tweet. So they were wrong the first time, and then they want to correct it again on the following tweet. And it's like, it clearly doesn't work. It doesn't predict anything. It's supposed to predict price action, but it really doesn't. It's like trying to predict the future by rearranging a horoscope. All right. So this couldn't be any more true. What most people think the Elliott wave is. If you scroll through forums or YouTube, you'll hear this over and over. Elliott wave lets you forecast exact reversals. Okay, wave 3 is always the biggest move. Waves follow Fibonacci levels. It sounds compelling, right? But here's the real issue. They assume the market cares about these wave labels, which they don't. Okay, the market is random, price is random. They assume that the structure is objective, and it's not, it's subjective. And they assume that the calling waves equals calling tops and bottoms, okay? Which again, it just when you have technical analysis traders that think like this, they think price is predictable, that they know where it is. The thing is, like, you don't know where it is. It's always random, okay? All of that falls apart in real-time trading. So that's the hard part, okay? So the truth is that the Elliott wave is not a strategy, it's a narrative. Okay, so let's be clear. You can use the Elliott wave to analyze, but don't confuse analysis with execution. Very, very important. It's one thing to analyze after, it's another thing during real-time trading. You can't place consistent high probability trades off of vague, maybe we're in wave 4 guesses. Okay, it doesn't work. It's too subjective, too flexible, too dependent on you seeing the right wave, which does not exist. Okay, what you need instead is structure, data, logic, repeatability, probability, statistics, all these things. Okay, which again, learn the option premium. The option premium will tell you everything you need to know, or at least it'll give you a better forecast for future pricing. Okay, it's not going to be a 100% thing, but it's a much better math model than just drawing a couple waves and a couple lines on a chart. Okay, a better way, trade the reaction, not the wave count. So let's take a real world example, right? You're watching SPX. Price enters a Gextron bearish zone. Volume is spiking. Follow is turning the flow. Sorry, not follow. The option flow is turning bearish. Market makers are likely to defend. You short. It drops. 30 minutes later, QQQ hits another zone. Same condition. You short again. There's no need to figure out what wave 3 or wave C we're in. Just repeat the same setup. That's not guessing, that's structure, and that's trading the reaction. Let me show you an example here. This is actually part of our trade today with QQQ. Okay, we're going to take a look at the 30-minute time frame. Oh, it's even happening in real time right now. Okay, you see this MP line right here? This MP line represents, this is Gextron telling us this is the strongest resistance zone right now. As of right now, this is the strongest resistance zone, and as long as price can remain below it, you can expect some strong resistance pressure. The next thing that you want to do is go to Gextron and you want to figure out, okay, is the option flow aligning with this? Are there bearish orders coming in at these price levels? It doesn't have to be exactly on the dot, but you can see that it's pretty darn accurate, right? These lines are being given by Gextron, which again, you can look at past videos to see what Gextron looks like. All right. So when I'm trading, the next thing I want to take a look at is like, well, let's take a look at volume. How's volume? Right now, volume is a little bit low on this downside movement, right? We're seeing it. There was some sort of volume here, which is good to see on the smaller time frame, but we want to see it go on the 30-minute, maybe on the 15-minute time frame, and so on, right? And so this is much better. Like, I don't know what wave count this would be in, but as a trader, you want to make money and you need realistic support. You need consistent and reliable support resistance, so the option premiums can do that for you. Gextron does it for us automatically, so we don't have to worry about it. We just draw lines on the chart based on what Gextron is grabbing the data from the option premium market. Like, this is real time happening, right? As the market's going, Gextron is fetching that data and giving it to you in real time, like right now. What does the forward forecast look like for QQQ? Okay, the next thing is like, as a trader, when we're executing, we just want to say like, okay, if we're getting a reaction, we'll confirm with volume and we'll take it around the zone, right? Great, we'll take it all the way to VWAP line, or maybe the next area of interest, the next key level, 505. And that's it. That's the trade. It doesn't get more complicated. I don't need to count wave counts. I don't need to go through 15, 30 minutes, 1 hour, the weekly, the daily to figure out these wave counts. I just trade the zones. That's it. Level to level. These are daily key levels given by Gextron. And I don't have to guess. I don't have to look at historical past data to say how many touch counts this, touch counts that. That's historical. That's gone. That was last week's news. Nobody cares. We care about right now and the future. And that's how the stock market always has been, right? It's forward looking. So you need forward looking metrics. And then the next thing you want to look at is implied volatility, which again, Gextron can just tell you what is possible for this stock to go to by a specific date from the current prices based on implied volatility. So these are things that you want to look at. Okay, not wave counts and not historical data, all right? Or at least historical price action data. All right. Now I went on a tangent there. All right, so that's it. That's how we repeat the system. When it gets to a key level, we'll look at it. We'll pay attention to how price is reacting, how volume is reacting, and then we'll see the option flow data to see if there is supportive demand for it or if there's a selling pressure, and then we'll just react to that to the current market that we're getting, right? So when the Elliott wave can work. All right. So to be fair, some traders use the wave theory as context, not as a signal. So they might say, if we're in wave 5, I'll tighten my stops. Okay, you could think of it that way. That's a fair way to use it. If this wave 2, I'll look for a reversal confirmation. But even then, they're not trading because of the wave. They're trading based on price plus confirmation plus edge. Okay, that's the key difference. Most traders just think that this has to be the way, and this is the only way, and it's not the only way. You have to make a full thesis. You need multiple things. You need option premium data, implied volatility. You could use the Elliott way to see where you are if that helps you, but it's not a confirmation. Okay, you got to get all these things to create a bias, and then you take action. Okay, and then not even that, you got to pay attention to the option premium chart. Okay, how Gextron helps you trade with structure. So here's what most Elliott wave traders are missing, right? They're missing a reason to enter the trade beyond the wave numbers, which again, Gextron gives you all that stuff. It gives you the dealer defense zones, right? Just like I showed you this strong zone. This was provided by Gextron. Live option flow, so we're able to see like whatever option flow tool you're using. Gextron does it too, and it's able to tell you when orders are coming in to defend that spot or to reject that spot. Expected move levels. So we know what realistic price targets are. Gextron again will tell us like based on implied volatility, this is a potential profit target zone for you to aim for, right? And then the unusual option activity. That means no guessing, no subjective counts, just doesn't meet the setup criteria. All right? That's how Gextron can help you out. And this is what Elliott Wave doesn't have. Okay? So the final word, trade like a pro, not like a prophet. Okay? So if you're someone with a six-figure account, this is really important. If you have a six-figure account, you cannot afford to make these kind of silly mistakes. Okay? You cannot afford to make these kind of silly mistakes. I talked to plenty of traders with six-figure accounts, 250K accounts, 300K accounts, and they've blown it all the way to 2K, and then they want to grow that back. Is it possible? Yes, but good luck. It's going to take some time, okay? Because they believe in Elliott waves, they believe in technical analysis, they believe in historical price action, and it just doesn't work. You need forward-looking tools. And again, Gextron can do that for you very easily. You just look at it and you say, okay, that's it, and then you take action. All right, you don't need more complexity. You need simplicity with precision. An Elliott wave can be fun to study, but if you want to trade profitably, trade based on what's happening now, what matters to the market makers now, what real money is doing now, okay? Not what the waves say they should do, okay? The market doesn't work that way. The market only cares about what it cares at that given moment, not what you think it should do, all right? Structure beats storytelling every single time. So again, let Gextron give you the structure. If you want to try Gextron, there's a 7-day free trial. I'll put a link in the description. Give it a shot. It's risk-free, all right? And that's it. So in general, does the Elliott wave really work? No, it doesn't work. You could use it and make to give you some more context, but to take execution on it, it doesn't work. You need more, like I said, forward-looking metric tools. All right. So that's it for this video. If you want to trade with us and catch some of these wins, I'll put some links in the description box, and then I'll put a link in this to this article in there too. If you have any comments or any questions, just drop them down. I'm always active there. So yeah, I'll see you in the next video.